Okay, today's Monday, and what we're going to do is review the trades. First of all, the HL30 that we called and we traded after the market opened. So here's the start of the new week and also the new day. You see Friday's cutoff right here with this line, and we have Friday's high. Now we've got this spike high that occurs after the market opens. We're looking at a 30-minute chart, so we know this is 1 hour. These two candles are 1 hour. There's 2 hours, there's 3 hours. So 3 hours after the market opens, we get a spike high to test Friday's high. And that high goes up as high as 84. So we are within our range, the 10 pip range. 83 would be the cutoff. So if it dropped to about 81, 82, I'd probably leave it alone if it only went as high as 81 or 82. In this case, it went to 84. Now remember, the checklist, the entire checklist to get out so that you have each step confirmed, it's in the Learn Forex Trading in 30 Days ebook. You can print it out. It's an actual worksheet checklist. Now the next step is to wait for a closed completed reversal candle pattern. And here's our closed completed reversal candle pattern. That's an engulfing candle pattern. Now each candle pattern, the reversal candle patterns that we need that have to be in place for the HL30 to be valid, those are also in the Learn Forex Trading in 30 Days ebook. Now I go over step by step when we don't trade a reversal in the opposite direction of the trend and when it's okay to trade a reversal in the opposite direction of the main trend. We have to wait for the candle to close, and the entry is on the close, but we can't take it until we've also confirmed the indicators. The indicators have to be lining up correctly. The entry is on the close of that candle, a close of 32.76. That's our entry. And we're looking for a 20 pip target, and we will use a 20 pip stop. So our stop will be 96, which would be right about here. That would be our stop. So you'll also notice that that would technically be above the spike high. The target is also 20 pips. Remember, this is a 1-for-1 reward to risk ratio. So we're looking for 56 as a target. And you'll notice exactly where 56 is. So here's our entry, here's our target. You'll notice that there wasn't much of a pullback. Here's our stop, and you can see just about how long it takes. This is about average, the length of time that it takes for a trade to pay. After you hit your first target, and I prefer to trade more than one lot, and I recommend, if you can, trade more than one lot on the HL30. Once it hits its first target, we're then looking for a second target of an additional 20 pips, and we set any open remaining lots at a break-even stop loss. This is how it works. 56, we're looking for an additional 20 more pips. So we're going to go down here to 36. Now I'm not saying that this happens every single time. It doesn't always go to a second target. So for example, you've got two lots when you enter the trade here at 76. Once price hits 56, you close one lot, locking in profits or banking profits, and you set the remaining open lot at a break-even stop, so that if price comes back up here to 76, now if you're using say a pip and a half, or let's just call it 2-point spread, then if price hit 74, you would close the trade, not losing any more money on that second lot. You wouldn't lose any, it would just close at zero, but you would lock in the price and the profits that you earned on the first lot. But if the trend is strong and it continues, the second lot is open and continues to run to the second target here, thereby earning you 40 pips from the entry of 76 to 36 on the second lot, and the first lot you earned 20 pips. So effectively, the money that you're actually earning is the result of 60 pips. Now we're looking at the dollar Canadian, and I'm going to switch to the 30-minute chart to show you what we did this morning. Now here again, this is that same pattern: Friday close, Sunday open. Here's Friday's spike low. There's a spike low on Friday right there, and here is the high on Friday. This is Friday's trading range on the 30-minute chart. As price approaches support, we need to identify support. That low is 99.70. There's 70. This low here is 64. Same thing with that white candle there. it's also 64. That's our 10 pip range. Price could have gone as low as 60 and still qualified for that 10 pip range. Once we get our 10 pip range, as price approaches either support or resistance, we wait for a reversal signal candle, and that candle has to close. This is our reversal signal candle, and this candle closed at 69. That is also our entry. 69. That's our entry. Now we're using a 20 pip target, 20 pip stop. 89. That's our target. That high right there where my arrow is went to 88. So waiting again. So you'll notice that the never came down to the stop. So our entry was 69, our target's 89. Now, as I've said before, and I'll say this with every single trade is going to be just a little bit different. They're not all going to work the same way. You'll notice and you'll remember that the euro dollar went to its target a lot easier. The direction from the entry to the target had very little pullback. And in this case, price went up as high as 82 and our target's 89, and it pulled back pretty deep. All it did, and again, notice what's happening, not what you want to have happen. Don't panic. If you've done your job correctly and you follow the rules and you've got faith in the system, you'll notice that all this was a retest of Friday's low. No candles closed below that low. Now this one didn't go to the second target. The next target would have been up here. This would have been our second target for 40 pips, and it didn't work. So if we've got two lots, we close and take profits at the first target, and then we set the second remaining open lot, or any others, however you do it. If you do 10, you can close 5 and leave the other 5, or however you scale out. And when price comes back down to, if the entry was 69 and you've got a 2-point spread, you'd be looking at 71. And then you'd close out that second half of the trade at 0, not losing any money, and earning the 20 pip trade here. So this paid 20. So we earned 40 pips on the euro dollar, really the equivalent of 60 pips if you're using more than one lot. And this one only paid 20. So you can see where I'm going with this. If you're trading two lots on every HL30, you would have earned the equivalent of 60 pips on the euro dollar and 20 here, for a total of 80 pips for the morning. Now, the next thing we did, and I want to show you how quickly you can reverse position. Once this trade's completed, we notice that price is coming back and retesting this support level again. We switch, or we keep, the 1 hour chart in front of us. I want to show you what else was happening as this test of this low occurred. We had a breakout or continuation signal candle here. This was a confirmed continuation signal candle. This is the 1 hour chart. This is the trade that pays 55 pips on this pair. This is the breakout technique, or the continuation trade. You learn about this in the Learn Forex Trading in 30 Days ebook. On the breakout signal candle, we need the 3 pip entry. We never saw a 3 pip entry. The next candle was 64. There's a tweezer bottom right there. So here we get our 3 pip entry on that spike low here. Let's identify 61. There's 61. That's our entry. Once we get our entry, now we're looking for a 55 pip target and a 55 pip stop loss. From 61, the profit target in this case would be 6. Here is 6. This spike low went as low as 6. Here's 6. In the first 30 days, you'll understand these concepts and you'll see them. And you might be able to trade just like this. But don't worry if you can't. Just remember, you're going to learn and you're going to understand these methods and the structure. And I have a complete 30-day schedule that will walk you through every week so that by the end of the 30 days, you will be able to trade these. And remember, you also get lifetime membership to my private Facebook group.